Hello, hello. How we doing tonight, guys? Hopefully all is well. You all had a great trading day. Can I get a quick confirmation that you guys can see my screen? You guys can hear me all right? I always need to check because I used to just start talking and then 5 minutes in, notice that not everything is all right. Just shoot me a little message in the chat if you guys can hear me all right. Awesome, awesome. Well, we'll get right into it. In yesterday's peer review, I talked about exactly what I wanted to see for today, and it was very simple. We formed a fair value gap. I wanted to see a retracement and continuation higher, and that is exactly what we saw, but not in the way that was the easiest to trade. At least that's what I'm going to say now. It was a tougher one today, at least for myself. So hopefully you guys did all right, but that's why these reviews are here, right? If we look at the daily candle, that is exactly what I wanted to see. Of course, I did expect us to dig a little less into that fair value gap and then leave the potential to go to previous day high. As you can see already here, just 2 hours and a half after the open, we've already taken that specific level. Let's go down to 15-minute here, and as always, go in replay mode. I always like to keep my indicators so I only see the current day, and then I can go in replay mode, and they are perfect for reviews. But if we look at what happened today, it's pretty high resistance, I guess, is the word that I use the most in this case. But that is mainly due to the fact that we had a big move early on in the day in my book, right? So we had our open and then what we frame as our manipulation lower into our daily fair value gap right here. So that is textbook perfect for daily structure to look for longs, right? So for me, my bias was instantly long because after this move lower, I expect here this manipulation lower, I expect price to then start distributing higher. And we had clear objectives with previous day high, right? So right here, we have Monday's high. I just wanted to make sure I'm using the correct thing. And as you can see, relative equal highs with the Friday PM session highs. And also if we include the morning session with Friday's highs, we had very clear objectives higher that we failed to reach, right? We didn't go all the way there. But you also had some pretty clear objectives beforehand with current high of day and Asia high. So I am going to mark out current high of day as well because those were my clear objectives for the day. Now, after seeing this 930 candle here, we see on the 15-minute chart trading all the way down here and then back up was a little confusing. But if we look a little closer here, and I'm going to bring my crosshair so we can look to the right at the same time, we can see that we formed SMT at this level, right? Just over here. So let me mark this out. So with this SMT at the lows, it gives you all the confidence you can need to look for long. And as we said, two Asia highs, two current high of day. And afterwards, looking at previous day's high, all the way up to Friday's highs, which is not previous week's high. I really thought it was. I forgot that Monday and Tuesday traded quite high. But very clear objectives going off of this daily fair value gap. So for me, it was definitely bullish. I did look for shorts at some point, which we are going to look into as well. But understanding the fact that we are bullish for the day, I can look for short retracements after my objectives have been met. So after an important level of liquidity like the current day's high has been taken, then I can start looking for potential retracements. And more importantly, if we notice on ES here, it was with SMT. So at this point in time, there was SMT between NASDAQ and ES, with ES having failed to reach these highs, which led to some very nice opportunities to go lower. But once again, understanding that since we are bullish for the day, any move lower is going to be a retracement. And so what are our retracement objectives? Well, if we look for a retracement here, we're going to use premium discount and look for the first discount in efficiency, which in this case is this wonderful inversion fair value gap, which as you can see, we failed to reach in the first leg. And if we head over to the second leg here, this is where we fully reverse. So this is where you could have kept looking for long continuations in the PM session. I would never look for any continuation before then, especially due to the fact that after this point, we no longer have SMT at the current day's high because ES also took that, which means that this would be a bearish move. I would be bearish looking for a retracement. And once that retracement is met, first discount and efficiency, I can look for continuations higher. So as you can see, a little bit more of a complicated day, but once we go down the time frame, we'll look at setups based on these frameworks, right? The harder part for the morning, and I'll remove this for now, it was really not to find entries. It was more so to find the available frameworks. And as you can see right here, we had a bunch of long unicorns. Nothing here was valid for me. Why is that? Even though there is SMT at this low, even though there is everything, there was nothing in the higher time frame and nothing taking out these pre-market areas. So the only thing that I could even consider at this point would be taking a short to London low. But as we just explained with the daily structure, I'm not looking for shorts. I'm looking for longs. So of course, if I had a different model, I could have longed right here, beautiful inversion fair value gap would have been definitely a nice thing to be trading today, but that's not my model, right? I need a unicorn. At this point in time, this unicorn is after current high of days met. So the truth is, you guys might have noticed me in the futures chat this morning. I spend a lot of time there nowadays, but it was like 11:08, 11:09, and I had not taken a trade yet. Why? Because no longs were worth my time here, and then my objective was met without giving me an entry. So there's nothing worth my time, and no shorts were valid at this point in time. Even though we had SMT and everything, I did not believe that a short retracement could be possible here because ES was very bullish. Now, if you did take a short here, well, actually, no, that would have been a loss, right? So if we look right here, we inverse this fair value gap. The next one would have been your entry. You have IFVG order block for a nice 3PD array stop loss here. So you can see this would have been a loss. In the following short, that looks like a win. So I'm entering here. You have inversion fair value gap, order block, and order block. No other inversion fair value gaps. So with your stop all the way up here, it would have been, well, you would not have gotten stopped out before a while. But as you can see, not a lot of risk to reward was offered in this area. Now, the truth is, in this case, would this be a valid trade? Well, you have to think, what are my targets? Well, I understand I'm bullish, which means that if I'm going to be targeting something for a short, I'm going to look at the first discount and efficiency. And as you can see right here, you would have had beautiful equal lows. Now, does this objective offer enough risk to reward for this entry? No, it does not, which means that I have to wait for a better entry to allow for at least 1.7 R. Now, in this case, that entry did come. So this would have been a valid setup for sure. It just did not work out, right? And that's what happens when I mean by high resistance. As you can see, we had a hard time going lower, then I had a hard time going higher, then I had a harder time going lower, going into a large phase of consolidation, right up until a little bit later in the PM session. So right up until this point, this is bullshit, right? It's consolidation. How can you predict consolidation? SMT on both sides of the ranges. I mean, they are probably close, a few dozen, right? SMTs. I was looking for a good number to display it. But for me, when there's divergence of both sides of the ranges, right? We can see divergence on the lows. We can see divergence on the highs. This is the markets telling you we are currently consolidating. We need to accumulate orders. We are lacking volume. So what is your job during that time? Wait. And for me, I always look for the hourlies, right? What, as ICT traders, we like to call macros, right? But wait for the hourly opens, and we're looking at that 20-minute time period with the last 10 minutes of the hourly candle and the first 10 minutes of the next hourly candles, right? 50 to 10. In this case, I'm just showcasing 10:50 to 11:10. And then that leaves you some opportunities, like this one, for example, which don't mean they will be successful, but if you're always waiting for macros, you have a maximum you can lose there, which means that you're just managing risk with valid setups. As you can see, we finally did head for that level right here in the PM session. Now, would I have considered taking a short? 100%, specifically this is also something I showcased this morning. Let me check if I can find, I did not send a picture here. But on NASDAQ, as you can see, we didn't have an entry here right up until this point, right? Where we had our breaker block form. Well, it was formed on this candle, actually, which would have led to your entry being on this candle as well. And you would have had plenty of return for that same partial that you had in the morning that is still valid as a first discount. But also, this is where we can go back to our 15-minute and bring back our first discount in efficiency, right? That IFVG that we saw right here. So this is where you have your point of interest where you're like, hey, I no longer need to go lower. As you can see, it aligns beautifully with the equal lows that we spotted in our 1-minute chart right here. Let me remove this so we can see a little better. Our equal lows right here. So now, following this, you would have had, of course, as we just saw, let me just actually find the right stop loss. So you have this fair value gap, which you're using as an entry, order block, and inversion fair value gap. So in this case, the inversion fair value gap would have been your stop. So a very nice trade there. Definitely a very nice short. I actually managed to catch this after taking one loss in here a little later. Well, actually, pretty much this trade I just entered 2 minutes later. So I took a loss here. I did want to see a lot more return. Especially when it was down here. I took basically one partial, but I didn't go fully break even. I trailed to this high, and which means I was just a slight loss. So not a full loss, thankfully, but just a slight loss there. Wait, Ali, you entered at 1332 and not there. Yes, I personally entered at 1332 here. Why? Because on MNQ, that was a beautiful unicorn. Now, right now, we're reviewing NQ, right? Our main one. So the actual setup, as we can see on NQ, would be this one, right? We formed the break on this candle. This is why it gets a little confusing. And here, I'll actually show you guys, because I don't want to just be saying shit and not showing you. But there you go. So as you can see right here, from this breaker block, right here, you form the breaker block, retrace into the fair value gap, which means that would have been a valid entry right here. But if we go back to NQ, we can see right here, this one did not give you a valid entry. There is no inversion fair value gap for you to look to trade right up until this one, but never retraced into it. So is it a valid entry? 100%. But for me, I was trading MNQ, so that would be valid. Otherwise, there's no way I would have seen that. So Magic, it's all about being pessimistic and realistic at the same time, right? I saw it because today I was trading MNQ, but usually I'm trading minis. The only reason why I'm on micros right now is because I just passed some funded accounts that I want to build a buffer on. So I need lower risk than minis can allow. So just trying to be pessimistic. Of course, you were in the chat with me today, Magic. We took pretty much the exact same trade. So you know I was in there with you. It's just not something I want to advertise too much because, well, you're never going to know if you were on MNQ or not, right? I'm never looking at NQ and then looking for the entries on MNQ. And if it gives you an entry, then go for it because I'm trading the liquidity that is offered. For NQ, would you ignore the top breaker because the second breaker is created? This is the main breaker, of course. This top breaker is also a valid breaker. It just never gave you an entry. So in this case, this is the one I'm going to be looking at, right? With this fair value gap in mind, of course. And yes, that's it for the early on. As we said afterwards, our 15-minute first discount and efficiency are equal lows being taken right here. We have everything that aligns now to look for continuation, higher. And we have a clear target with the current high of day. And as we can see, just to the right of that, we have all these swings that form what a lot of people like to call trend line liquidity. I don't like to call it that really because people just draw trend lines. I'm drawing it rough, of course, but draw trend lines and be like, okay, well, liquidity is taken once you run through it here. That's not how I see things. I look at those and I see them like, it's going to be funny, but if you guys played Mario Kart, you're going to know those little boost pads. When you drive on top of them, you speed up. That's how I see them. They're fuel for price. So when you have a lot of swing points in close proximity like that, it is low resistance. And when they go through it, they're going to fuel price to go higher all the way to your objective. That is how I treat these failure swings, which is what their name is. And as you can see, you did have an available entry here. You formed some breaker blocks, a little rough on the upside, but you did form some breaker blocks. Now, the sad part is you just didn't have an entry. It was so high resistance just before that we did not form any fair value gaps that we can look to inverse to give you an entry. And the first fair value gap we retraced into was this one. Now, is this still a valid entry? Yes. Is this the best trade I've ever seen? No, because you're already halfway to your objective. But what you're going to be focusing on is, does this offer enough risk to reward? So let's look at it. If I'm looking for 3P array stop loss rule, I have this fair value gap, I have the order block below, and then I have nothing right up until the swing point, which is this order block with the swing point. So your stop would be all the way down here. But does this offer enough risk to reward to the current high of day, which is my target? Yes, plenty. So in this case, this is still a valid trade. Also, a rule that I haven't talked about in some time, but what I like to do is use something that we call the implied dealing range, which is basically you're going to be using the low of your framework to your objective and understanding that you're looking for entries below the midpoint of this, right? So can I write? Yeah, midpoint. Let's call it that. You're going to be looking for entries below the midpoint. Now, of course, this entry is just above the midpoint, but if we move it a little bit aside, we trade it to the midpoint and then bounce right off. This is perfect textbook. So this is another rule you can use if ever you're wondering, am I too late to this move? This is how I like to do things. But of course, the main rule is definitely, does it still offer me enough money to be worth my time, right? We also look at the lunch session, and let me actually bring it back here on this session indicator that I have. You had a lunch trade to confirm that we could look at this, and lunch high is also here. I'll remove my drawing actually. Lunch high is also the current high of day. So you had two reasons to look for long in this case. So very straightforward framework, highly confirmed. So in cases like these, I don't mind taking a little bit later of an entry. For myself, I took this short, did not look for a continuation long. I actually took a short a little higher, as Magic explained a little bit earlier. So I did not look for the long, but both of these frameworks are beautiful. Here you're trading the manipulation. And once we reach these objectives right here, as discussed, it now no longer makes sense to be short as we are in a bullish day. And you can now look to trade the move higher. As you can see, taking your trade, your profit, pretty much taking profit at lunch highs, would definitely have taken at least 75% of my position at this area, right? This is what happens when I don't have a clear area to partial, because as we just explained, this is all low resistance and should run through it. Well, in that case, I'm just going to have my main objective, take a big partial at that main objective, go break even, hold a runner. And as you can see today, that would have been pretty profitable with, as always, the same rule. Whenever I don't have a clear area to take profit, I always look to close all my trades at 4 p.m. So always look at the opening price of the 4 p.m. candle. That is the point where it is officially 4 p.m. If we look, that would have offered a final runner with a value of 4.21 R. So if that's 25% of your original position, that's a little over, well, 1.05 R. So 1.0525, not too bad. So definitely a very good day in terms of returns for the setups. Truth is, it was just hard to navigate, right? I treated the two volume imbalances as a fair value gap to enter long. Fair enough. You know, it happens and it's okay. I don't personally use them. I like to include volume imbalances as a... Sorry, guys. I like to include volume imbalances as part of my fair value gaps and inversion fair value gaps, but I don't use them as individual PD arrays, right? It's just a question of how comfortable I am now, and that's the truth with you guys. I'm not looking to improve my model for now. I am working on myself specifically, which means I'm looking to improve my psychology, my trade management, my risk management, my ability to follow rules consistently throughout time. And once that is absolutely secure, I mean, I'm still making a few mistakes here and there, but it has definitely gotten so much better in the last few months. I definitely feel like a much more well-rounded trader. Well, at that point, maybe I'll look to include some specifics. Maybe there are ways I can further improve the rice trading model, but this is not a priority at the moment, and it won't be a priority until I have nothing else to do or it stops making money. And to be honest with you guys, as I said, it has been making money for the last 20 years, back tested. Of course, I have not been trading it for the last 20 years, but the same exact rule set is consistently profitable over 20 years on this asset and on ES. And I haven't tried it on other assets, but I am pretty confident that it would be. Why? Because it's based on very simple factors: expansion and timing. And I mean, when you're trading statistical frameworks, it's very hard to be unprofitable. Yeah, I just went on a big rant about my model. I am sorry, guys. I love it. I don't know what I can say. But once again, a day filled with opportunity, but this one was a hard one to navigate. Not a bit hard. It was high resistance for most of the day. Truth is, the main opportunities came in the PM session for me. Truly, truly was like that. Do you guys have any questions? I'd be more than happy to spend some time, on days like these. These are the types of days where possibly you guys saw other setups that I can prove or disprove. I can help you guys understand why it didn't work, perhaps. I'd be more than happy to. But usually the answer I get in these PA reviews is all clear. But more than happy to spend a few minutes with you guys. Pretty packed review already, 20 minutes. I've been trying to keep them a little shorter, just so it's easier to rewatch them on YouTube. Nobody wants to listen to me rant for 40 minutes. Well, some people do, but I don't want that for you guys. I see you guys typing, so I'm going to give you all a second. No rush. I won't close out the event on you. Cheers as always. Love it. Been trying to expand and do it on gold. Great review. Thank you. Appreciate it. But yeah, gold is definitely one I looked at. I did look at oil first, CL, if you're wondering the symbol. It was pretty profitable, but what I noticed about those assets, which are metals and I don't know in which category actually oil is, but they are quite seasonal, right? So there are some times where you just consolidate over months. And in that sense, it is great for scalpers, right? Because it is ranging markets and they are great to be trading. But I'm not a scalper. I'm an intraday trader. When I look to take a trade, I look for that trade to last a few hours, right? My average is an hour and a half approximately to my first partial. And then my good trades, they last 6-7 hours almost, right? They last for the whole regular trading hours. Can you go over your breaker block indicator, how it works? Vito, thank you so fucking much for asking me this, because I am not going to be covering it, but I'm going to go over to our resources channel and I'm going to link to you a post that we did, was it a long time ago? July 17th. So a little over a month ago, we went super in depth about the whole breaker block indicator and all of the settings I use and what the settings do and how you can set it up. All of that pretty in depth. And you can find the recording right there. Yeah. So thank you for giving me an opportunity to mention it, the resources channel. I've been trying to fill it up. So anytime we talk about important stuff during a price action review or something, I add it in there and it's under the tag educational content. So if you go into the resources channel and click on the educational content tag, you'll find that we have 5 right now. So statistical range framework, I'm not going to name them all, but we have a few important price action reviews right there. So yeah, if you're ever looking for something, definitely going to be in there. On that note, though, I'm going to wish you all a great night. We're going to call it here. We're going to see each other back not tomorrow, but the day right after. So I'll see you all on Thursday. And good luck if you're trading tomorrow. Good luck for your trading on Thursday. As always, I am going to be in the futures chat no matter what. You guys have a great night. Bye, guys.